Welcome back. Foreign investors pumped over 22 billion dirhams into Dubai's real estate market in the first half of the year, according to government data. According to local reports, Dubai's land department revealed that 12,875 properties, including buildings, land apartments and villas, were bought in H1. It also showed that Indian, Pakistani and British buyers dominated the market, followed by Russians, Iranians and Saudi nationals respectively. GCC investors invested 12 billion dirhams into the sector, and Emiratis topped the list in the apartment segment. Experts believe that the market has been attracting more foreign investors over the past 2 years due to more flexibility for investor requirements. Saudi Arabia has come out as the largest export and re-export market for Dubai Chamber members in the first half of the year, with a total value of 36.3 billion dirhams, 27% of the overall total. According to a recent Chamber study, Iraq came in at the second spot, with exports and re-exports valued at 19.4 billion dirhams, while also emerging as the fastest growing market. Other large markets for the period were Qatar, with the destination of goods valued at 10.4 billion dirhams, Kuwait at 8.8 billion, Oman at 5.1 billion, and India at 2.8 billion dirhams. Additionally, trade between the UAE's local companies and Dubai's free zones and duty-free shops registered an export value of 6.9 billion dirhams. And Emirates Transport signed 133 million dirhams worth of contracts in the first half of the year. The Government Transport Centre, the business arm of Emirates Transport, signed and renewed 31 transport and leasing contracts with 28 federal government ministries for H1. The director of the centre, Abdul Ghaffar Youssef, stated that 4 contracts were signed with the Prime Minister's Office, the Sharjah Central Financial Department, and the Quran Memorization Centre of the General Authority for Islamic Affairs and Endowments, at a total cost of 4 million dirhams. Real estate company DR Development PJSC announced a double net profit for Q2, reaching 18.6 million dirham, up from 9.4 million dirham for Q1 2012. And Takar's power and water business saw a strong performance for H1, which saw revenues grow by 14%. With that, let's look at the stock indices across the GCC. Indonesia's latest growth figures show its economy is growing faster than all BRICS nations, bar China, renewing talk that the Southeast Asian nation could soon dislodge India from the bloc of emerging market nations. What is the likelihood of Indonesia overtaking India, and will this growth last? We earlier spoke with Dauba-Pantanacce, the senior economist at Standard Chartered Bank.
Well, I'm not sure that I would put the question exactly in these terms, in the sense that Indonesia and India are still very different economies, especially in terms of size. India's economy, in terms of its GDP, is twice the size of Indonesia, and its population is 5 times higher. But interestingly, Indonesia has a GDP per capita that is twice the one of Indonesia, and we actually think that this gap will accelerate in the future. So, indeed, the recent figures that we heard coming out of Indonesia are very positive. And we at Standard Chartered Bank have been quite bullish on Indonesia for some time. And we indeed think that there are structural reasons to see Indonesia prosper in the future. The 3 main reasons for that is, first of all, the wealth in commodities. The second element is the rise of a very strong middle class. The third element is urbanization that leads to a much faster growth. The other elements is that if you combine everything, this will definitely put Indonesia at the forefront of the fastest growth economies, and we think that Indonesia will be in the top 10 economies worldwide by 2020 and will be in the top 6 by 2030.